educating investors.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the terrific Tuesday, the July 5th edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to check on the circumstance of these markets. We're going to go figure out what the bulls and bears, what those buyers and sellers are communicating to you and I at just past 1 o'clock in the afternoon. I do want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this. During the next 60 minutes, I'm here to serve you. So feel free to pick up that phone. Would love to hear from you, 877-927-6648. Now, if you can't call in, we've got you covered there, too. You can always let those fingers do the walking. That means go ahead, send me an email. Now send it to Steve at TFNN.com. But inside the subject heading, if you'd be kind enough to put radio show question, of course, in our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, got a sea of red out here, with the exception of the spot volatility and the 30-year Treasury on my left-hand panel. The Dow is off 585 points, about 1 9/10. The S&P down 57, 1.5%. NASDAQ about a little over 0.1%, or 16 points. Russell's off 21, that's 1.25. Semi's down 1.5%, or 35. Trend is up 235, 1 8/10. Gold is off $36, a little over 2%. Selling should stop about right here. Silver is down 57 pennies. She's trading out at $19.09. Light sweet crude off $10.60, trading out at $97.84. Natural gas trading out at $5.42. That's off 30 pennies. The 30-year Treasury up 2 points and one tick. 141.12 is the print out there. So, what are the markets doing? Excellent question. Let's answer that question by taking a look at first the index ETFs. Let's get a feel for volume matrix out here. So you got the SPY pulling back right now and just testing the bottom of its daily profile. That's at 375.19. The low today has been 372.90. Support has held. If you take a look at the Qs, they got back and tested the support at the bottom of their daily profile, 277.24. Price actually didn't get all the way down there, get down to 276.75. But what we do know is support has held. We've got, in the case of the Qs, it's tested its swing point, the swing point being July 16th, and it's done that on lighter volume. That lighter volume, did we get down there? 277. No, we didn't get down there on Friday. We got down there on Thursday. It was similar type volume, wasn't heavier volume. The case of the Dow Diamonds also testing the bottom of its daily profile. Now, volume today fairly light. You should expect that. We would anticipate that. For example, the SPY's 40 million shares to the downside. The swing point that it could go after, I'm not saying it's going to go after, has volume of 111 million shares, so much lighter volume. In the case of the Dow Diamonds, the volume is 4.7 million shares. So far today, doing 1.8, so that's light volume. The IWM has retested the swing point. Its swing point that I'm referring to is from June the 16th. The volume there was 43.8 million shares. So far today, done 13.3. So, to summarize, what the index ETFs are saying is no volume to the downside and support holding across the board. If we take a look at the sectors that make up the S&P 500, first sector is the XLK. Now, the XLK has tested and rejected the top of the swing point from June 16th. This will be session number 3. Perhaps third time is the charm. Each of them on lighter volume out there. That suggests that the XLK should make a move to the 130.16 level. The XLV is above the top of its daily profile, so it remains bullish. The XLF tested and rejected its swing point. That swing point is from June the 16th. That had 100 million shares. It was tested on June 23rd. I don't have the volume, but it was lighter volume. It was tested again on June 30th. And this morning, it looks like it was pretty close to a test. May have tested, got down to 30. I don't have my data box up, and I'm not going to go ahead and get it up there as we speak. The point is the XLF is pushing lower with light volume. The XLY, if we take a look at the consumer discretionary sector, it too has tested its swing point. Again, that swing point is from June the 16th. Volume there, about 12 million shares. On Friday, that test was much lighter volume. And today, you're only done 2.5 million shares. Talk about no selling in this sector to the downside. Very interesting. If you take a look at the communications sector, communications tests are also testing its swing point from June 16th, also doing that on lighter volume. In the case of the industrial sector, it is trading inside its June 17th swing point. So if it does close below 86.41, even if it's lighter volume, you may get down and test the low of that. The consumer discretionary or staples area remains bullish as prices above the top of its profile. What you're not hearing me say or give you any kind of signal is anything that's bearish really with inside the sectors of the S&P 500. Now we get to the potential bearish sector. That would be the energy sector. The energy sector is taking out a swing point from the trading session of June 24th. That had volume of 56 million, but you're only down with 28 million shares. Doesn't matter if you close below it, you still could get an A to B equals CD to the downside. So you'll watch the 69.47 level. The utility sector, still somewhat bullish from the standpoint that prices trade above the top of its daily profile. The material sector is struggling. I suppose really to be expected out here. And right now that is trading below its swing point from June 23rd. That had volume there of about 9.4 million. You're at 5 million. So that's the sector that's got the most volume in it, or appears to at this stage here, but it still would appear to be light. The real estate sector, if it closes below 40.88, that's going to suggest that price may make a move down to the 39.19, 39.40 level. So to summarize what we see inside the sectors of the S&P 500, with the technology sector, the healthcare sector, and the financial sector being three important ones to take a look at from a weighting standpoint, all of those are actually suggesting higher price. So what else do we want to go look at? Well, it's a good question. Where do we want to go to next? I think we go to the equity future contracts out here. So let's go take a look at the ES Mini. Give me a moment here. We'll change screens. Well, I've got the NQ. Let's just start with the NQ out here, since that is the one that has shown the most positivity, if that is a word. If you take a look at the NQ, what has it done? It's tested the bottom of its daily profile. It's tested and rejected its oscillator and change line. It does suggest to move up to 12.037. The 5-hour time frame chart, I don't have any kind of a signal out here, but if we take a look at the 2-hour time frame chart, what price did was it formed a Rhodes momentum indicator bottom. This was back here at about 4 in the morning on July the 1st. Today, price got back and tested the TD 9-count breakout level of 11.401. Price traded above the top of its profile. The ES Mini, or the NQ, I should say, is headed towards the high from July 4th out there, and that was up at the 11,749 area. The 60-minute chart shows that price above the top of its bearish structure, or its profile as well. That suggests a run for its highs. The 30-minute time frame chart, I don't have anything else here to suggest anything different. So the NQ does look like it wants to continue to move higher. Steve Rhodes with TFNN. Would love to hear from you folks. 877-927-6648, where you can send me an email and send it to steve@tfnn.com. We'll be right back.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. I hope everybody had a great 4th of July out there. 363 days of the year. You can call me Stevie Perseverance Rhodes, but 2 days of the year, that changes to Stevie Pyrotechnic Rhodes out there. That's July 4th and New Year's Eve typically. So the kids always have a blast. We light the fireworks off the dock, so it's totally safe. I've got a system rigged up so that everything is so that we've taken all the precautions necessary, and it's always a blast to shoot those things off and have a good time. Even though we can look out the front door and watch the fireworks going off on the large barges in the ocean out there. In any event, fireworks. We're going to take a look at fireworks here today. See if we can find anything out here. Let's go to our first question. The first one coming in from Rachel M. It's actually the only one. We've got 2 questions at this stage. Rachel M. writes in and says, "Hey Steve, could you take a look at ExxonMobil? Do you think it looks like it could break the 82 to 83 support level on a bounce? Could this be an A to B equals CD to the downside on a daily time frame?" So all good questions. Let's try to answer those questions here for Rachel. We'll look at both sets of charts out here. So first, there already was an A to B equals CD to the downside, at least one that I had out here, Rachel. The A point that I start with, which is the same as what you would start with, is the high here from June the 8th. Then my B point that I use is down here on June 13th. C point was a 2-day bounce, a little over a 38% retracement. And that was on it's June the 14th. 1-to-1 was 87.02. We never got the bullish reversal. Well, you did get a bull sash candle right here. I take that back. That was on June 21st. But once price closed below that level meaning the low of the pattern, which was 85.66, that negated that pattern. So what ExxonMobil needs is another bullish reversal candle to confirm an A to B equals CD to the downside. Now, price is testing a swing point. Rachel, you probably know this, June 23rd. That had volume out there of 35 million shares. You're below it right now with 18 million shares. So you've got the light volume. But if you close below that, does not mean that we can't go lower. In fact, I would suggest that it does indicate we would go lower, and lower to where? 81.92. Now, you picked out 82 to 83 as support. 81.92 is the bottom of the weekly profile. So that's a potential level of support out there. Will it break through that area? That I don't know. You don't have the volume necessarily, but you can still bust below a swing point with lighter volume. But at least you're not busting it with volume, especially on a day like today where oil is taking a big hit. Now let's go switch over, take a look at those white background screens, see if there's any additional information that we can share with Rachel. First, we look at the monthly time frame. And here, Rachel, what you see is a TD9 count top. That confirmed last month, the month of June. You can also see that the monthly oscillator and change line, that's that red, green, squiggly line out there, change colors. Once you get a top or a bottom, in this case here it's a top, we would typically see price and that line catch up to each other. Now that is down at the 75 area, 74.93 on my screen. But first, price would have to close below 81.92 in order for that to come into play. But that is a likely outcome at this stage here. Now, it could mean sideways movement at ExxonMobil, the price, the oscillator and change line moves higher. I don't know what that combination looks like. I just know to anticipate that that's a likely test and outcome. Again, nothing, well, you did have a Rhodes Momentum Indicator top on the weekly time frame. TD9 count and Rhodes Momentum Indicator top on the daily time frame out there. So the weekly's got that profile support 81.92. Not much to belabor there. 82.71 happens to be a TD9 count breakout area. So that could be another spot. So you got 82.71, 81.92, and if those levels fail, then price is likely targeting the $75 area, 74.94 being the monthly oscillator and change line. So, Rachel, I hope that helps you out. Again, there was already a to B equals CD pattern in play out here. The next bullish reversal candle would identify a buy the D point pattern. So thanks for the request, and we'll look forward to hearing from you again, I hope. Dan in the Tiger's Den wanted to take a look at ticker symbol IPI. So let's get IPI fired up here on these white background charts. I'll get them going on the black ones as well. And Dan is asking about the weekly time frame, looking for a potential TD9 count pattern. And last week, he's dead on balls accurate here. Last week was a TD9 count completed bottom pattern. Now, the cool thing about IPI, this is Intrepid Potash, I believe, it is trading right now below that low. That low, by the way, is 42.88. So, Dan, if price closes below 42.88, that pattern gets negated, and that says no reason to buy. Price is trading, because price is trading below, at least it's a weekly chart. It's only Tuesday. So I don't know where the end of the week is going to complete. But as long as price remains below that area, 27.47 becomes a target level. We looking at the white background? I want to make sure here. We are. So let's go to the monthly, and we'll come back. Got a TD9 count top on the monthly. That was the month of April. Price is now below the bottom of its bullish structured monthly profile. So, Dan, this is suggesting 27.96 as a destination, the monthly TD9 count breakout level. So you got 27.96. You've got 37.47. Now, 27.96 would be another weekly TD9 count breakout area. So if price does close below 37.47, then you have your answer as to where price is likely targeting. If we look at the daily time frame for Intrepid Potash, you do have a Rhodes Momentum Indicator signal. And I can see an A to B equals CD to downside, but it does not look like it's anywhere close to completing. So I'd be watching. So to the extent that you're looking for a long trade here, Dan, because you got that Rhodes Momentum Indicator signal out there, a bullish reversal candle would at least give you your buy signal. Now, if you could get that the next couple of days, get price back up above the low of last week. Again, that low out there was 42.88. Then you're onto something. And that onto something would likely be a move up into, well, first you'd have a battle of 46.62, another one at 52.81, another one at 57.45, another one at 59.44. And then if you can clear that, then you should be in pretty decent shape out there. But we'd have to take a look and see where that oscillator and change line on the weekly chart is printing at. Should price be able to get up to the 59.44 level. But we don't have anything right now. We don't have anything right now to suggest that that is happening out there. Looking for a weekly Pearson. Yeah, you've got the weekly Pearson. So the cool thing there, I think, Dan, is you've got what you were looking for. And the answer should reside in the daily time frame chart to give you that trigger out here. Now, I don't have any short-term time frame charts up on my screen. It's just easier right now for us to look at the monthly, weekly, and daily. I don't see any reason to have to switch over and take a look at intraday charts at the moment out there. But that's what I would be looking for. So I do hope that that helps you out. And thanks so much for your request. Just checking here real quickly. I don't see any other requests, but I'm sure that, well, I tell you what, let's do this. Let's go take a look at the SMHs out here. So take a look at the SMHs, because they do not have any kind of bottom signal. And so it's hard to fathom that the market will form some type of bottom without the semiconductor indexes out here. And we took a look at the NQ, and they're certainly signaling a bottom pattern out here. But when we take a look at the SMHs on the monthly chart, confirm Rhodes momentum indicator top, price below its breakout level of 216.14, below its profile levels, bar number 6, it's suggesting lower price. We look at the weekly time frame chart, Rhodes momentum indicator top out here, price below its profile levels as well, only in bar number 5. I don't see any kind of a bottom pattern or signal here. Now, there is an A to B equals CD to the downside pattern. That's easy to see on the weekly time frame. And so if we did get a bullish reversal candle, that would confirm a buy the D point pattern out there. On the daily time frame chart, only in bar number 4, you on Friday, you negated a TD9 count bottom out here. The semiconductor index is saying that it wants lower price. Steve Rhodes with TFNN. Be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So no questions in the queue out here at the moment, but I figure many folks are wondering, hey, Stevie, what's going on with Goldilocks out here? So as we take a look at gold here, you've got our 8-panel multi-time frame set of charts. You'll see today is going to become bar number 8 of a TD9 count. We're also in wave number 7. That's letter G out here. Now you need to have a higher low in order to confirm that pattern, but that can be a bottoming signal. Bar number 9 has to complete tomorrow, and it should be able to do that unless there is a rally. And it'd be a big rally to close above 1750 or 1764 as we speak right now. So we could see a bottom in effect for gold between today and Thursday out there. So that's something to pay attention to. Now, if we're going to get a bottom, we'll usually see intraday time signals out here. Nothing on the 5-hour, nothing on the 2-hour, nothing on the hourly chart. But I did mention, as I was doing either the update, I think it was 1 o'clock update, that we should see price stall here. Now, that was based upon the TD9 count pattern that formed on the 30-minute time frame chart. Now, that bottom formed at 12 noon, and price closed just below it as we went into the 1:30 session out there. So that TD9 count bottom has been negated, and so what I shared with you before is a little bit suspect right now. There is a wave number 7 pattern that's in play here, so it still has that potential for a bottom. There's a Rhodes momentum indicator signal that's been triggered. It needs a bullish reversal candle. But what I shared with you during the 1 o'clock update, had I known this, well, it didn't exist at that stage here, I wouldn't have said what I said. Because I don't see any other bottoming signals as we speak. There are some 10-minute, 5-minute patterns that are out here, but nothing that's been confirmed just yet. Let's go switch over to our other set of charts out here for gold. Take a look at what it's doing. Those are the black background charts. This gives us some larger time frames. So now, no reason for us to take a look at the daily, but if we take a look at the weekly time frame, you're going to see that consolidation pattern. And as long as price on a weekly base closed below 1791, odds favor price moving back into the 1700 area, 1698. If price closes below, this would be this hammer candle, the trading week of that began the week of August 9th. If there's a close below 1695.10, now I'd have to go back to the actual contract because this is it might be that same price, but it might be off just by a tad because this is my synthetic version of the contract, so I get profile levels for these larger time frames, monthly, weekly, quarterly out here. But if price closes below the low of August 9th, whatever that low is, then that's going to suggest an A to B equals CD to the downside with a 1-to-1 price projection of 1583. Now, we had gold close above the top of its bearish structured monthly profile. Did it for 3 consecutive months, the month of February, March, and April. Typically, when you close above a bearish structured profile, if price gets back down into that level, a counter trend move would find support at the center of that profile. The center of the profile is 1764.10. We're trading at 1763.80. So price is basically sitting at a level of support out here, but we need those intraday charts to give us that signal. But this could be a resting point here for Goldilocks. Now, if price closes on a weekly base, a monthly base, I should say, below the 1764 level, that's a suggestion of a run to 1585. Remember, we were at 1583 on the 1-to-1 A to B equals CD to the downside. The last bastion of hope from a support from a TAS profile standpoint would be the quarterly profiles, the top of which is 1747.70. So I'd say 1747.70 is the real key level to watch to the downside. If that gives way, well, then we've got that hammer candle that we took a look at in the weekly chart, and below that, then that says we had much lower, 1585 would be an easy target. 1524 to 1449 could be the target. No, I am not at all at 1:34 in the afternoon saying that is what's going to happen, because price is sitting at that key level of support. We take a look at that monthly time frame. So that, in essence, is what we see going on with Goldilocks. Let's take a look at light sweet crude. Give me a moment here. I'm going to get those fired up on the multi-time frame charts, but we're going to start with the longer term view and the black background charts, and that's going to get us right here. So now we take a look at light sweet crude. Let's get rid of those trend lines. We're below those trend lines, so just clean up the chart here just for a moment. Get rid of that. Get rid of this. There we go. So now we take a look at light sweet crude on a daily time frame. You have price now below both the swing point. The swing point that I'm referring to is from the trading day of June 2nd. That swing point low is 101.53. You're below the bottom of its daily profile, which was 103.51. 1-to-1 gets us down to 194.24. 1-to-1.272, 88.85. If we take a look at the monthly time frame chart out here, price is consolidated with inside its monthly profile. So, I'm sorry, weekly. I said weekly, upper right-hand chart. Price is consolidated with inside the weekly profile with potential support at 94.11. It does look like it closed below 101.53 would bring that 94.11 area into play. The monthly chart has a brand new monthly profile. This formed here in July. The center is at 96.19. Now, I don't know whether it's a bearish structured profile, but price was never above it. So I don't know that price will hold this area or not, but it is a level of support. So our levels of support so far inside of light sweet crude are 94.11 and 96.19. The monthly or the quarterly time frame chart shows price got all the way up from its highs back in 2009, or 8, I should say, down to the low in 2020, and price made a 0.786 retracement, a normal spot where people would get off of the elevator. Let's go switch over, take a look at our white background chart, see if there's anything else out here to help us. And here, what do we see? The 2-hour chart, bar number 8 of a TD9 count. The 60-minute chart, the bar following bar number 9 of a TD9 count. The 30-minute chart, Rhodes momentum indicator signal, and a TD9 count bottom. So this is pretty cool. What you have to do is really two things. So 136, well, it's going to work out really kind of perfect here. And that is at 2 p.m. We'll already be off the air, but I'll be doing the 2 p.m. update. Whatever the low for light sweet crude is, right now the low of the day is at 98.22. Let's just assume for right now that this holds for the next 24 minutes. I don't know that it will, just saying let's assume that it does. Then if price closes below that low, and I would venture to say even on a 30-minute basis, because you've got a TD9 count bottom that should have that same low. It does, in fact. Again, that is at 97.65. Is that what I said before? I did, 97.65. If I didn't say it, that's what I meant to say. It closed below that on a 30-minute basis is going to tell you that light sweet crude wants to run lower. Otherwise, there should be some type of counter-trend relief rally. That relief rally should take us to the 99.38 to 100.59-ish type area out there. So we could or should see some type of relief rally out here. But longer term, it still looks like there's more damage to be done to the downside. Let's go take a look at Hi-Ho Silver, see what it is doing. Silver, we're in the September contract for it. We'll get these white background charts fired up. Let's go switch over, I think. Give me a moment here. Yeah, let's go switch over. We'll come back to the white background charts here in a moment. We'll go take a look at the bigger picture out here for for silver. Again, what I'm going to pop up on my screen are the Stevie synthetic version of the contract. That's so I can get these weekly, monthly, quarterly profiles. You can see the large A to B equals CD to the downside for silver would get you down to an 1851 price projection. That would just be the 1-to-1 area. But you're going to see here momentarily when we switch back to the daily time frame charts that today is bar number 9 of a TD9 count. That says that we could or should see a bottom in silver by tomorrow. You make a lower low. The bar following bar number 9 out there is a part of that pattern. Boy, wouldn't it be nice for silver, I suppose, would it be nice for silver to get down to 1851, complete the 1-to-1 on the weekly, complete the TD9 count on the daily, and then start moving higher. Real quickly here, we can switch over to those white background charts. You'll see the TD9 count pattern for the daily time frame. Look at the upper left-hand chart. You'll see bar number 9 is forming. Today out here, you've got a TD9 count bottom on the 30-minute time frame chart, the 15-minute time frame chart, the 60-minute time frame chart. So a counter trend move should unfold. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Real quickly, folks, back to gold. Brent had written in and was asking about a potential midweek setup. And, you know, Brent, I think what we just have to do is monitor the short-term time frame charts. We know we're in bar number 8, wave number 7 on the daily time frame. We want to see some type of real good confirmation from those intraday charts out there. Good solid bottoming pattern, some resistance levels begin to fail out there. And so I just think we need to be patient to watch for that. I don't know that there's much else that I can report back to you on for that. So I do hope that helps you out, and thanks for taking the time to write in. One of our dinners, S&P wants to take a look at Cleveland Cliffs out there, looking for an entry point. So that entry point is basically, first let's look at the, let's start with the daily time frame charts out here. So the daily time frame chart today is going to form bar number 9 of a TD9 count. So it could be today's low or tomorrow's low. But if you're looking to get in, then this could be it out there. You know, you're already in bar number 9. I would say that if price is able to close above its red oscillator and change line, that is at 1513. We're at 1501 right now. A close above that would say that, now, not that you don't have battles up ahead. You do at 1562, 1657, 1782. But if you're looking for the bottoming pattern on the TD9 count, it's either going to be today or tomorrow. Cleveland Cliffs has a average 10-day trading range of $1.05. So your stop would be about $1.70 or so, $1.72, 3, 4, 5, say $1.75 below where price is trading right now. If you're going to go ahead and enter that trade out there, the weekly time frame chart still has an active TD9 count bottom. Now that remains active as a bottom unless price closes below 1531. We're trading at 1501 right now. So if you're more conservative, then you wait for price to at least regain that area. A close below that would negate that pattern, and then that would suggest lower price. In the case of Cleveland Cliffs, the monthly chart says, hey, I've got a Rhodes momentum indicator top. I'm below my bullish structured monthly profile. I eventually want to get down to $4.92. I'm not making that call here just yet. You've got the weekly and the daily TD9 counts to consider out there. So I do hope that helps you out, but you're looking for an entry point. It's basically right now. Use that information I gave you. Pay attention to that daily red oscillator and change line, and the weekly TD9 count bottom that if price closes below would negate that pattern out there. So I do hope that helps you out. Thanks so much for taking the time to write in. One of our dinners, another one of our dinners, this is Rahul, wants to take a look at Tesla, and he's hoping to, or she is hoping to get Tesla at the 650 level. So let's go see if on Tesla we've got anything that would suggest that as a likely outcome. So we look at the monthly time frame. Monthly's got a Rhodes momentum indicator top. Price has gotten down towards the bottom of its monthly profile. That's at 616.63, and so far that level is held. You have a TD9 count bottom on the weekly time frame that took place right at the TD9 count breakout level of support. That was at 627.24. Now, Rahul, price should go target that red oscillator and change line, currently printed in the 760 area. The daily time frame for Tesla shows us what? It's a great question. I see an A to buy the D point. A to B, which is the B point would be where this hammer candle low was. B to C was where that B point is from a Chapman wave standpoint. And then all the way down till generates that nice bullish engulfing candle. This is back around the 25th of May out here. We've pretty much just had a sideways consolidation, but price likely to go find a battle at 704.16 and then 743.20. Your specific question was, do we see price getting to the 650 area? Well, it already really got down to where you should have been looking at it, which was at 627.24 level, the TD9 count breakout area. That was also supported by the bullish structured monthly profile level. Today, so far, was a test of what? Well, there's a brand new profile, actually. It's not showing up clearly on my daily time frame chart. So let me give this to you, Rahul. Brand new daily profile. The support level, the bottom of its box, is at 659.27. The center is 691, and the top is 745. If you see it close above 691.58, odds favor price going to make its way to the 745 level. So I hope that helps you out, Rahul. Thanks so much for taking the time to write in. Our next question coming in from HD. HD wants to take a look at BTU. Blackman Turner underdrive out there. So let's go take a look at BTU, see what it is communicating to you and I. Let's make sure we're on the right panel. We are. So with regard to BTU, could you please look at BTU for a long please? Well, daily time frame looks like we've got an A to B equals CD to the downside that is forming out here, at least today. So let's go. Let's flip. Well, let me. Price is below the weekly profile. That says, okay, don't go take a look at the daily. A to B equals C to the downside. The monthly suggests that price might want to target the 1510-ish type area. But let's go switch back and take a look at the daily time frame for the potential A to B equals CD to the downside. It's more easy for me and more accurate for me to draw it off of the black background chart. So the A point out here, HD, is going to be the high from the week that began April 18th. The B point is going to be the low from the week of May 12th. And the C point is going to be the high from the June 7th, 2022. So your 1-to-1 A to B equals CD pattern. This is a daily time frame. The swing point that it's dealing with was at May 12th level, 1950. That had volume of 7.3. You're at 5.7. So it does appear that you're going to have the volume to confirm on Peabody Energy and A to B equals CD to the downside. That initial price projection, or that 1-to-1 level, is 1607. The 1-to-1.272 is 1232. So it does look like you're looking for a long please. I would wait for price to get down into those areas. And then let's take a look and see what patterns are going on, both from the daily, weekly, monthly, as well as the intraday time period. So HD, thanks for taking the time to write in. I hope that helps you out. Mike M. Mike is up in Portugal, formerly from Sarasota. He said, did I miss it? No questions on the euro. It broke 17-year support on for Forex. So I don't save this. Let's go take a look at the euro. So which screen am I on? Black. Let's just start here. So nobody asked about it, but I'm very familiar with it. And we can see here, now this is the interesting thing to be paying attention to. This chart, much longer term chart, we're looking at monthly time frames out here. But what it does is it helps us to understand what might be coming next. What might be coming next is a huge rush of capital out of Europe into the U.S. Certainly already it's finding safe haven in the U.S. dollar index out there. It should start bleeding over into the large cap stocks, certainly the Dow and just the U.S. stock market in particular. But it could also be real estate in the United States. It could be anything U.S. oriented. Now, on this chart here, you can see that price is trading below its closing low. So this is a line chart, so we're looking at closing prices here, but trading below the 2016-2017 closing low out there. And there is nothing, as we take a look at this, that is going to or should stop the descent of the euro until it gets down to its 2000 lows out there. Now, this is a monthly time frame chart. It's the early part of the month out here, so it could rebound, and that says we really should go take a look at Stevie's other euro charts out there. But Mike, good point in taking a look at the euro out here, and mostly because as bad as things seem to be, as bad as the news is, the one thing, folks, that you don't want to overlook is the global flow of capital. What I can guarantee you is the top that was made in 2000 they call the .com top, that was formed by euros flowing to the U.S. Really simple. That pattern, quite frankly, has been in place now since 2008 as well. The price breaking through a key level of support. When we come back from this breakout here, we'll finish looking at the euro, but looking at its multi-time frame charts out there. Steve Rhodes with TFNN. Be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we got the monthly chart up here for the euro. The monthly chart for the euro shows that a TD9 count bottom formed in June. That held in July, but now we're trading below that low. And so if we do get a close below that low, by the way, is going to be 1.0349. So a monthly close below that says that pattern gets negated, and likely that we get down to those lows in 2000. If price closes below 1.0343, and we're trading below that right now, that's in essence the swing point low that took place in January of 2017. Then what that sets up, and you can see a nice little consolidation pattern that was out here. You can take that square, that consolidation, that would give you just simply a measured move. We'll go ahead and try to put that triangle or that rectangle, in here. It's like about like this, give or take. And all I have to do is move this to the bottom of the consolidation or the break of the consolidation. So we're basically about right here. And look where that gets us to. Gets us all the way back down to the 2,000 lows. So what this is telling us, Mike, now this is the monthly time frame chart. If we go take a look at the weekly, no bottom signal here. The daily, price below its breakout level 104, no bottom signal here. You're in bar number 6. On a daily basis out here, 60-minute does have a TD9 count bottom. Suggests you could get a counter trend move. Counter trend move could take us up to about $1.028, $1.027, something along those lines out there. So it's definitely something that we want to monitor. And the reason is because if we do see that global flow of capital, we're not going to understand technically why. In fact, we can kind of throw the technical patterns out the door because just simply there'll be a flush of capital. You talk about dips being bought. Dips will be bought in a huge way here. So we definitely want to keep an eye on the euro. So, folks, the show is coming to an end, but there are 2 more wonderful hours up next. Your favorite polar bear, David White, is up next. Following that, you got Tom O'Brien. He'll take us on home. I'll be back with you on wonderful Wednesday. Thanks so much for joining us on Terrific Tuesday. Hope you had a great weekend out there, and we'll look forward to seeing you again tomorrow. Take care, folks.